Hi, you guys. Welcome back to the channel. Well, it's official. We are in a bear market. Remember, a bear market is described as a 20% drop in stock market. And today, after we had about another 6% drop in the S&P 500, we are officially in a bear market. Stocks plunged around the world and oil tumbled and the stress of the U.S. credit markets deepened as the World Health Organization called the virus spread a pandemic, and the Trump administration remained unable to detail any stimulus measures to combat economic fallout. The latest bout of virus fomented turmoil took the S&P 500 more than 20% below its February closing high, which was back on February 19th, you guys, putting it on the verge of ending the longest bull market on record. The Dow Jones Industrial Average is also 20% below its closing record. Circuit breakers would trip, halting trading for 15 minutes if the S&P's 500 drop reaches 7% before 325. After that, the drop would have to reach 20% to stop trading. Remember, the circuit breaker, as they call it, was put in to stop a market free fall. If the market falls more than 7% on an exchange, it automatically stops trading for 15 minutes and you can't make a trade. The second time it drops, usually at 13%, it will trigger off another 15-minute period, and again at 20%. So the Dow dipped below 23,641, leaving it 20% below the record set on February 12th. So February 12th was the high day for the Dow, and I believe February 19th was the high day for the S&P 500. A close at that level would meet the accepted definition of a bear market and end the bull run that began 11 years and 2 days ago after a $20 trillion was added to equities. The S&P fell 5% and it's 19% off its all-time high, so it's technically right on the verge. The World Health Organization declaration and no plans from President Donald Trump to combat the virus's impact on the economy rattled markets that got a respite when European officials signal a growing willingness to move soon to combat the virus's effect on region's economy. Goldman Sachs slashed its forecast for the S&P 500 and said the bull market will end. We have no idea when the coronavirus, the spread, is going to subside. That uncertainty is going to continue to create a lot of volatility. We have no idea how to model it. We have no idea what to expect from it. All but two stocks in the S&P 500 retreated Wednesday, with every industry down at least 3.7%. European equities wiped out a 2.3% advance that they had sparked earlier in the week. You guys, it's going to be a challenging time going forward here in the next few months. Don't despair. Keep investing. Buy quality companies. Buy good quality ETFs or index funds. Hold them for long term. All bull markets must come to an end at some point, and this looks like maybe this is the time for this one, but that doesn't mean we can't turn it around in a few months. The average bear market lasts less than 18 months, you guys. Now, I know that seems like a long time, but remember things to do to prepare for a bear market / recession / pullback in the economy, whatever you want to call it. Make sure you keep some cash on hands, because a lot of times when recession and pullbacks like this happen, a lot of unemployment goes up. So if you lose your job, you lose your income. It's good to have that emergency fund intact. Remember, 3 to 6 months is what you want. Cash isn't yielding much of anything right now, but you got to have it in case something happens. All right, you guys. Thanks for checking me out. Subscribe if you haven't already. My name is Brad. This is the Firefighter's Financial Toolbox, and I hope you enjoyed something out of this. If you did, smash the like button for the YouTube algorithm as a way to show me, or leave a comment. And if you really liked it, share it with a friend. All right, we'll see you. Bye.